Good day everyone, and welcome to our webinar for March 2025. We begin in America. There's obviously an enormous amount going on over there, especially with Donald Trump and his erratic behaviors and pronouncements. There's no doubt that the S&P 500, which should be on your screen now, is far more volatile since Trump won the election. As you can see here, it's been ranging between a low point, probably down there, 5827, that was on the 10th, and a high point up here, which was in fact a record high at 6144 on the 19th of February. I've tried to keep you up to date with the various issues as they've occurred through Twitter, on X. So especially at the sort of key turning points. If you look at the chart, you can see here our tweet on the 2nd of January 2025, when we said that we believed that the market was moving back towards a period of risk on. In other words, we were due for an upward trend, and you can see after that the market moved up to this record high of 6144. It was interrupted by Trump announcing his tariffs there on the 31st of January. And we tweeted on the 3rd of February that the bull remains intact. And then finally, after this record high of 6144, 2 days after that, on the day when the S&P was still above 6090, we warned that 6090 was a critical support level, which we had drawn your attention to in previous confidential reports. You can see it here. It is in fact the record high, closing high that occurred over here on the 6th of December 2024. So it's one of the previous record highs, but we identified it as a key support level. And we said on this day, if it breaks below that, then we're in for a correction. And as you can see, it did break below that. And we had this pretty hectic correction which has occurred since then. I call this Trump's correction because I believe that he is basically motivating it through his tariffs, which are on again and off again all the time. It's also being driven by Elon Musk's ill-considered staff cuts in government, and also by Trump and Vance's controversial stance on Ukraine, which we will talk more about. The market is desperately trying to discount all these different issues. And of course, nobody quite knows what Donald Trump is going to do next. Probably he himself doesn't even know. So this correction, in our opinion, can be directly attributed to Trump's insanities. In the background, the US economy continues to perform pretty well. It remains the primary driving force behind the bull trend, which in our view remains intact despite this correction. But uncertainty about what Trump is going to do next is obviously slowing the progress of the bull trend now. Some analysts are even talking about Trump causing a recession with his tariffs. In other words, where GDP actually shrinks in a particular quarter or 2 quarters in a row. But as far as we're concerned, this is still a correction. And of course, you have to bear in mind that Trump's trade war, which he's busy trying to set up throughout the world, could change that. What we say to you is this: make sure that you maintain your stop loss strategy and do not ignore it, because that is your catch-all. If things really go wrong, and remember, Trump is not predictable, then you should be out of the market on stop losses if the market starts to really fall heavily. Once the correction is over, of course, the S&P 500 should go up and make new record highs, because the underlying factors which are causing this bull market remain pretty much in place. They are basically new technologies in artificial intelligence, humanoid robotics, and of course the falling cost of renewable energy and the fact that renewable energy is becoming more widespread all the time. And of course, the trade war which Trump is busy orchestrating will be costly for Americans. Even Trump is saying that Americans will have to face some short-term pain. But I can tell you, Economics 101, the basics of economics, tell you that free trade between countries is the best situation. It benefits everyone. Any interference in the system, like tariffs, increases the costs for both parties involved. Our view is that Trump will back down on most of his proposed tariffs. He's already backed down on some of them, we know that. And he's very much on again, off again. And none of these tariffs will slow down the movement of fentanyl into America, which was his original ostensible reason for implementing them. Markets are reacting negatively, but we believe that they probably will recover. Many countries are now considering tit-for-tat tariffs against America. Europe has promised a proportional response. And of course, into that mix has come the freeze on American aid to various countries, especially South Africa, where a number of people will lose their jobs here as a result, and people will go without their medication for AIDS and other illnesses. But basically, America is stepping out of the picture, and I think into that gap, other countries will step in. Probably China. Elon Musk so far has fired about 20,000 US government officials, and about 75,000 have taken advantage of early retirement. So his impact is approaching 100,000 people who are out of a job. But the American economy is running at an unemployment rate of 4%. So I believe that they will find jobs very quickly. The affected departments so far are the Department of the Interior, of Veteran Affairs, of Agriculture, Health, and also Human Affairs. Altogether, about 3% of the civilian employees of the government have left the government service. The question really is he cutting fat or is he cutting into muscle? For example, he fired 3,400 employees in the Forest Service just after California has had record forest fires. And the groundswell of opposition to Trump and Vance and Musk is growing. Protests are breaking out across the country. An interesting incident was when Vance took his family to Vermont on a skiing holiday, and he faced protests there at the ski site and had to actually move his family, relocate them to a secret location because he was concerned about their safety. So people are not happy in America. Looking to the economy, however, the US jobs report for January showed that 143,000 new jobs had been created. Economists were expecting 175,000, so this came in a little bit below estimates. And that, of course, comes after December's figure, which was a massive 256,000 jobs. So it shows a considerable slowdown, but the unemployment rate has moved back to 4%, which, of course, is a concern because that is basically the full employment rate in America, and it indicates that any further employment will come with inflationary tendencies. In other words, people will, because there's so few people available and so many jobs, the price of labor will tend to go up. And this may cause the Fed to slow down the rate of interest rate reductions. But it shows that the economy is still performing strongly. And clearly, of course, what is also obvious is that the Fed has been successful in achieving a soft landing. There is some concern that GDP growth could be low in the first quarter or even negative as a result of Trump's interference in the economy. And we'll just have to wait and see what happens there. The consumer price index in America came in at 3% in January, which was a bit higher than expected. Food, gas, and housing pushed inflation to the highest level since May last year. And this, of course, shows the stickiness of the inflation rate in America these days. Traders are now only expecting another rate cut in September this year. And that means that they're not discounting anything in the near future. What is interesting is that Tesla shares have collapsed since their high of $479 on the 17th of December last year. They are currently down 43% and are looking very weak technically. In our opinion, Musk has lost interest in Tesla. He's focused on his work for Trump and also on SpaceX and Neuralink, but he's lost interest in Tesla. That's what we see. His absence from Tesla is costing hundreds of billions of dollars. Warren Buffett is arguably the greatest investor who has ever lived. He's now 94 years old and he's still working. Berkshire Hathaway, his company, made a profit of $47.44 billion in 2024, and that was up 27% on 2023. In the fourth quarter alone, profits rose by 71% to $14.5 billion. Berkshire Hathaway is sitting on a cash pile of $344.2 billion. That's as at the end of last year. For the past 9 quarters, Buffett has been selling more shares than he's bought, and that includes a large chunk of his biggest investment, which is in Apple. It's always interesting to look to see what Warren Buffett is doing, but he's sitting on a massive cash pile in America at the moment. All right, let's turn our attention now to Ukraine. All eyes, of course, are on Trump's supposed peace initiative. The talks have so far absurdly excluded Ukraine and Europe. And of course, Trump saying that Zelensky is a dictator and that Ukraine caused the war, all that's really not going down well. Trump and Vance's treatment of Zelensky in the White House the other day has also been roundly condemned. Keir Starmer, the Prime Minister in England, has formed a coalition of the willing, what he calls a coalition of the winning. And that marks, in our opinion, a very important step, as does Zelensky's recent meeting with King Charles, which apparently was asked for by King Charles himself. And we all know that Trump really wants to meet King Charles. I'm not quite so sure that that's going to happen anymore. Europe is seeing that it must step into the gap left by Trump and America. Other countries like Canada and Australia will expand that coalition. The US is invited and would be welcomed, but the point is it's not essential. There is talk of European countries putting troops into Ukraine, and I think this is potentially a very important development if it happens. Europe has more than 2 million professional soldiers. In other words, they don't have to do any conscription. They've got 2 million soldiers already. Committing some of them to Ukraine would make Putin realize that he cannot win this war. But he has opened the door for this kind of foreign intervention by inviting North Korean troops into the fight. It's important to understand that the Russian GDP is less than 1/10 of Europe's, even without America. And it is apparent that both Russia's army and its economy are in a desperate situation. Over the 3 years of the war, Russia has lost 36,500 military vehicles and fuel transporters. Now there are reports that the Russian army is using donkeys to get ammunition to the front lines. This shows the extent to which the Russian army has been degraded by Ukraine. Half of Russia's shadow fleet of oil tankers have also been sanctioned and can no longer operate. About 46% of its oil refining capacity has been destroyed by Ukrainian drones. It seems probable to us that some sort of peace deal will be agreed upon sooner or later. Ukraine will obviously have to get some sort of security guarantees. It is willing to accept the existing Russian territorial gains for the moment. Putin will not be there forever, and when he goes, they can negotiate a return of the occupied lands. Putin's reputation at home has been severely damaged by this war, and we do not believe that he can survive a peace when it comes, and we do not believe he can survive the war to continue either. All right, let's turn our attention to South Africa. On the political front, of course, the big news was the postponement of the budget. It's really the first serious disagreement that has occurred in the Government of National Unity, and so far, in our opinion, it's being handled very well. The ANC, of course, has had to accept that it is no longer in control. The DA has always opposed tax increases to fund social expenditure. The need for this increase has been caused by a 5.5% increase which was given to the civil servants in the latest negotiations with them, and also the continuation of the SRD grant, which was originally implemented for to help people through COVID, but it's still going on now. And that, together with lower tax receipts, has created a real problem. Increasing VAT by 2% would be highly inflationary and will obviously also impact on the poorest people in the country. The two dominant parties must reach an agreement, a compromise. Kieswetter, who's obviously in charge of SARS, says that he's not in favor of a tax increase. He says that all that needs to be done is that SARS must be given additional resources to pursue the 800 billion which it is owed by taxpayers. Anyway, if these two parties, the ANC and the DA, can reach an agreement, it will show that the GNU is working well. The revised budget, of course, will have to find further funding for Transnet. The country is losing about R1 billion a day in lost export opportunities. Transnet needs about 70 billion over the next 5 years to fix ports and railway lines. Total trade, that's basically imports plus exports, fell 4% in 2024 compared with 2023. So that gives you an idea of the extent of the problem with logistics in this country. The Midterm Development Plan excludes any mention of the National Health Insurance Act, and there's no plan to finance that. And remember, the Midterm Development Plan was agreed by all parties in the government, including the ANC and the DA. The plan sees South Africa reaching a growth of 5.4% per annum by 2029. That, of course, is very ambitious and could only be done if Transnet's problems are sorted out. The NHI remains, as it has always been, completely unaffordable. Ramaphosa has focused his State of the Nation address on local government. Many of the 257 municipalities in this country are badly managed and, quite honestly, bankrupt. Corruption, laziness and incompetence have led to a lack of service delivery. Ramaphosa suggests that the Government of National Unity can work with them to fix the problems. If this is done, it will be a great boon for the country. The ANC's anti-American stance on various issues has now become a problem, beginning with its membership of BRICS, the non-American alliance, its friendship with Russia, its pro-Palestinian stance in the Middle East. All these things have led it to a bad position with its relationship with America, and Trump has now cut off all US aid funding to South Africa. And AGOA, the African Growth and Opportunity Act, is now in danger. Our membership of that act is now in danger. The South African G20 meeting, which took place here in South Africa and was chaired by President Ramaphosa, was snubbed by two Trump officials, Marco Rubio and Besant. But about 25% of our exports to the US, worth about $3.6 billion, fall under AGOA, and we would not want to lose that. Gwede Mantashe says that South Africa will withhold its mineral exports to America in retaliation. I'm not quite sure whether that's practical. President Ramaphosa has met with Elon Musk to discuss the land expropriation and discrimination issue, and discrimination obviously against Afrikaners, which seems to be a key issue. All right, let's look at the economy now. The BankServe take-home pay was up 16.3% to just over 18,000 Rand per month in January. So the average salary earner was getting 18 grand a month in January, up 16.3% on the previous measure. This is based on the average of 4 million South African salary earners. Headline inflation was 4.4% in 2024. This means that these people had a real increase in their take-home pay. Interest rates, of course, have come down 75 basis points so far, which has helped bondholders. And the two-pot retirement system released about 44 billion rand into the economy. So all of these things have helped the economy. The consumer price index was up 3.2% in January compared with December's 3%. But this shows that inflation has been very well controlled and people are really better off in real terms. A year ago, inflation was 5.6%, more than 2% higher than the December figure. So Kanyago, who is the governor of the Reserve Bank, has really done an amazing job. But he's very worried about Trump's tariffs, and the effect that they're going to have on the inflation rate. Otherwise, there does not seem to be any other good reason aside from Trump's tariffs not to reduce interest rates. The PPI increased by 1.1% in the year to January, up from December's 0.7%. That was mainly due to a 4.4% increase in the cost of food, beverages, and tobacco. Fruit and veg was up 9.4% and grains were up 5.9%. The cost of electricity went up 10%, electricity and water, The unemployment rate fell to 31.9% in the last quarter of 2024. 132,000 jobs were created in the quarter. And notably, the Western Cape has the lowest unemployment rate in South Africa at only 24.8%. The next best province is the Northern Cape with 39.7%. Stats SA says that 20% of all employed people in South Africa. Sorry, I think I read that wrong. In our view, Stats SA says that 20% of people in South Africa who are employed work in the informal sector. In our view, the informal sector is much larger than that and employs far more people than Stats SA is aware of. Stats SA also says that about 60% of the people between the ages of 15 and 24 are unemployed. Only 6.7% of whites are unemployed, 14% of Asians and Indians are unemployed, 22.3% of coloreds, and 35.8% of black people. So that shows the racial split there. High unemployment, of course, leads to many problems like high crime rates. Both the ABSA and the Chamber of Commerce PPIs fell sharply in January. This indicates a slowdown in the economy, and that is due to low client demand. Export orders were also down for the fifth month in a row. Cutbacks in staffing, especially in construction and services, have been taking place, and obviously there's been ArcelorMittal's closure of its long steel plant in Newcastle, and that's had an impact. There have also been difficulties in exporting through Mozambique. Despite this, the economy is still improving under the government of national unity. The World Bank predicts that GDP will grow by about 1.8% in South Africa in 2025. This compares with Bank of America, which is talking about 1.6%, and Old Mutual, which is saying the growth will be 2%. Of course, 10 months without load shedding and low inflation are strong positives. Debtbusters Consumer Debt Index shows that the purchasing power of people seeking counseling was down by 44% since 2016. So in the last 9 years, the purchasing power of those people has dropped by 44%. Incomes in that time have only increased in real terms by 2%. So people are basically 42% worse off. But these are people who are seeking debt counseling. And about 82% of them already had a personal loan, and about half of them were using a payday loan to get them through the end of the month. Unsecured debt was 29% higher in 2016 than in 2016. and 68% of their take-home pay was being used just to pay the interest on their debt. So these are the people who are in real trouble in South Africa, who've allowed themselves to get into a really bad debt situation. The National Energy Regulator of South Africa's decision to allow Eskom to increase its prices by 12.7% this year is just quite honestly absurd. Why do I say that? Well, 80% of Eskom's power comes from coal-fired power stations. The price of thermal coal is down 76% over the last 18 months, down from $439 to $103.50 per ton. So the 439 was in September 2022, and the 103.5 is from February 2025. And yet Eskom is pushing up prices by 12.7%, which is more than 3 times the inflation rate. Somebody has to explain that to me, because I really don't understand how they can justify increasing prices by 3 times the inflation rate when their basic commodity, their raw material from which they generate energy, 80% of the energy in this country, has dropped so enormously. All right, let's turn our attention to Bitcoin. Hold on a moment. Just trying to get myself organized here. One of the new things that's happened is that I now have 2 screens. So if I'm a little confused, you will forgive me, I hope. All right, there's the Bitcoin graph on your screen. As you can see, following the elections, the Trump elections, where he won, there's the date of the election. That was the 5th, I think. This is the 6th. And here you can see there's euphoria in Bitcoin around the Trump-Musk victory. And it went all the way up to this date on the 17th of December. By the way, that is also the same date where the Tesla share price peaked. And then you'll see what we call in technical analysis a descending triple top. I don't know if you can see that in this chart. We had a cycle low here at $91,000, 91,847. That was on the 13th of January. And since then, there's been a sell-off in Bitcoin, which found its strongest position yesterday when the coin fell to $82,500, and I think it's still falling. So we have always taken a position with Bitcoin that if you have them, sell them. If you don't have them, don't buy them. This is an asset, in inverted commas, which has no fundamentals whatsoever. It pays no rent, it pays no dividends, it pays no interest. The only thing that sustains Bitcoin at these prices is the perception of a large number of people. If those perceptions change for any reason, then the price will evaporate. So we see this as a real bubble, and we suggest that you stay away from it. All right, now I want to look at the Rand. Once again, I'm trying to manage these 2 screens now. See if we can. So I'm calling up the shares on one screen and the chart is appearing on the other. So I'm just not totally up with that. All right, I don't want so much data there. I just really want to show this part of the screen here, where you see the US election. There it is. Okay, it's over there. And then the uncertainty which has entered the Rand market over the Trump administration's attitude towards South Africa and its various interactions. You can see that we reached a low point here of 19 Rand and 14 cents to the US dollar. That was on the 10th of January. And since then, the Rand has been strengthening gradually and moving sideways. In our effect, we believe that the Rand is obviously bearing the brunt of people's attitude towards emerging markets. It is one of the most liquid emerging market currencies, one of the most heavily traded, and when anything happens that's negative for the emerging markets, the Rand will fall, and vice versa. America's isolationist policies that it's adopting now probably mean that South Africa and other countries will need to look for new markets. There will certainly be a cost to South Africa and to all emerging economies, but we believe it will not be that great for us. So we think that this trend may be over and the rand could now strengthen from these levels. All right, now the next thing I want to look at is steel. Eskom's electricity price has gone up about 250% since 2010, and combined with government mismanagement, this has resulted in the closure of ArcelorMittal's long steel plant in Newcastle. About 25,000 jobs have been lost in the steel industry since 2009. South Africa has got plenty of iron and should be able to produce steel more cheaply than overseas suppliers can make it and ship it here. Steel is not a high-value, low-density item. It is the opposite. It is a low-value, high-bulk item. So it's ridiculous that countries overseas can manufacture steel and ship it to South Africa for cheaper than South Africa can make it here. But cheap steel imports keep flowing into the country. Obviously, the knock-on effects of the Eskom disaster are being felt right throughout the economy, and the steel industry is just right at the front of that. All right, let's look at the oil price. Let's do that. See if we can get oil up on the screen here for you. This is, of course, North Sea Brent oil. And I just want to put a bit more data on the screen there. All right, what you can see here is a chart of the price of North Sea Brent oil. And oil remains the world's most important source of energy at the moment. It therefore directly impacts on the inflation and growth of almost every country around the world. Internal combustion engines are, however, giving way to electric vehicles, and the power source for electric vehicles is becoming more and more renewable, and especially it's moving more towards solar power. The demand for oil and its price, we believe, will continue to decrease. And as the oil price falls, that will improve the profits of all companies. In fact, all companies will benefit from a shift to renewables, not because of the climate change issues, but because the price of energy is coming down, it's falling. The downward trend has accelerated, like Wall Street, due to what we can call the Trump effect, and you can see that here in the chart. This triangle, which you see on the screen here, there's a support level at $72 a barrel, a long-term support level, which is quite well established, and then there's a downward trend line, which connects these two highs, $91.50 on the 5th of April, and this one over here, 15th of January, at 82.31. And from that last touch point there, the market has trended down sharply, broken down through the $72 level, and is now hovering around $70 a barrel. If $70 a barrel is broken significantly, that will be a sign that oil is going to fall quite sharply from that level. Obviously, if oil falls, it's good for world inflation, it's bad for the Russian economy. So this is a critical commodity that we must all pay attention to and watch. All right, let's look at some companies now, and here I would like to go to the JSE overall index to begin there. Here's the JSE overall index over the last 6 months. It's been what we call a broadening formation, bounded by resistance at 876.44, and that's on the top, and then that's a straight line resistance level, and then down at the bottom here a widening or falling trend line. And then so we had an upside breakout over here on the 10th of February, and then that was followed by a series of new record highs, as you can see in the chart. But since then we have faced the Trump correction, so the market has taken a bit of a hit from the Trump correction. But you will notice that we really haven't fallen that far, and certainly not as badly as Wall Street. And this is because South African investors like myself, do not really believe that this Trump correction will be sustained. We think it will not be sustained. So we're expecting Wall Street to go up, and therefore we're reluctant to sell the high-quality shares that we bought at lower prices. Obviously, however, in the long term, the JSE will always tend to follow the S&P 500. If the S&P 500 goes into a rally now and makes a new record high, then we can expect our market to rally up behind it. Probably it will move a little bit more quickly. All right, now I just want to look at Discovery shares. This is the first share that I want to look at. Obviously, Discovery was started and built by Adrian Gore, the CEO, to offer AB Income Group people a range of financial services. He began with medical aid services and now offers a full range of banking services and other services. The Vitality concept has been a great success for Discovery, and they've used it to go all over the world with this concept. Their platform now tracks about 1,000 customer activities and about 50 biometrics using an Apple Watch. Customers are rewarded for having good behaviors, healthy behaviors. The concept is taken off in the UK, in China, in Europe, and America. Okay, if you'd bought Discovery shares in 2002 on the 20th of August, so I'm just going to go back and have a look there. That's somewhere over here, I think. No. Back here. There. About there. You would have paid, there's a price here of 590 cents per share. Not quite sure where that price is. But what I've written down is that it was on the 20th of August. And last week, the share closed, as you can see over here, at 208 Rand and 82 cents. So it's gone from about 6 Rand to 208 Rand. In our view, this is a share that should be accumulated by private investors on any weakness. We added it to the winning shares list, as you can see on the chart here, a little while back on the 1st of August at 142 Rand and 80 cents. And it's gone up very strongly since then. It's gone up about 45% over that period of time. The next company I want to look at is Bluetel. Bluetel supplies consumer needs like prepaid electricity, ticketing, starter packs, and universal vouchers. Most of the businesses are provide a debit order business. We added this share to the winning shares list over here on the 22nd of January this year. It was 610 cents. It's now moved up quite strongly to 760 cents. So it's gone up nicely over that period of time. This company made a big mistake in September 2016 when they bought 45% of Cell C and pushed their debt levels too high. At one point, their debt was about 3 times their market capitalization. Can you believe that? Anyway, in September 2022, Cell C was recapitalized and Bluetel shares began to rise. And we've put it on the winning shares list. So it's one for you to look at. We think it will continue to perform well. The next company I want to talk about is Outsurance. Outsurance, of course, is what remains of Rand Merchant Investments holdings after the unbundling of Discovery and Momet. It's been listed as Outsurance since April 2023 and shown itself to be a solid blue chip share. And of course, they have this slogan: "You always get something out." And they basically have made a big thing out of no claim bonuses, which at the time that they started this were no real. They were not a huge innovation in the insurance market. Insurance companies have had no claim bonuses for years, but they made it into a big marketing issue, and they've done it very successfully. Anyway, we added this share to the winning shares list, as you can see there, on the 16th of June last year at 44.57. and it's moved up very strongly, now sitting up here at 68 Rand, and it's gone up about 60% in 8 months. We believe, again, it should continue to perform well. Nampak. Nampak, of course, is a big packaging company, South Africa's biggest, and it has extensive overseas interests and operates in 10 other African countries outside of South Africa. Basically has 4 types of packaging: metals, plastics, glass, and paper. Metals is the most important section because that is where they make various different types of beverage cans, from beer cans to cool drink cans and so forth. In their results for the year to the 30th of September, headline earnings per share came in at 13.78, up from a big loss in 2023. They've been conducting a turnaround strategy, which seems to be working very well. That started with their sale of Bevcan. No, I'm going the wrong way, aren't I? Let's just do that. Yeah, it started there. They sold Bevcan, as you can see over here, for when the share was on the 16th of May last year. The share was 190 Rand. We added it to the winning shares list a little bit later than that, at 228, and it's now sitting here at 426. So it's gone up very, very strongly. It's gone up about 85% over 8 months. And it's one of those companies that will benefit from the Government of National Unity and, of course, the end of load shedding and falling interest rates. The last share I want to look at today is Quilter. You probably haven't thought about Quilter very much. It's a UK-based financial services group that was spun out of Old Mutual. So I want to put a bit more data on the screen here. And it trades on the London Stock Exchange. It's got a secondary listing here on South African Stock Exchange. The important thing about this company is that it has 119.4 billion pounds sterling under management. So it's absolutely massive. As an asset manager, it's enormous. And it's a blue chip, and of course it's a rand hedge because all its business is basically overseas. And you can see that the share's been growing very steadily. We added it to the winning shares list back here in November the year before last, in November 2023. It was then trading for 21.54 cents to 21.54 cents, and it closed at Friday at 35 and change, 35.40. So this is a low risk rand hedge type share that's performing very steadily and should continue to perform well, we think, in the future. Okay, folks, that's about all I've got for you today. Don't forget to watch my Twitter feed, my tweets, if you want to know what's going on, especially on Wall Street, in the sort of interim between confidential reports. Otherwise, get the articles which come out every week. And I hope that you found something in today's presentation that is of use to you. Otherwise, I'll talk to you again in April. Thank you for listening.